Welcome back to Fast Market, everyone. Kevin Hinks back now for our cash tag segment. I want to bring in the co-founder of LikeFolio.com, Mr. Andy Swan, to the show. He's going to talk about our feature stock of the day, and that is McDonald's. A downgrade, Andy, today by Loop Capital. You know, they're attacking, of all things, the chicken strips. Andy, how can they attack the chicken strips? And, Andy, my basic idea about McDonald's is downgrade us, upgrade us, it doesn't matter. This stock is bulletproof. Give me your thoughts on McDonald's.
Yeah, happy Friday. I think you're absolutely right. This is one of those downgrades. It feels like a little bit of a Johnny-come-lately kind of concept here. The chicken strips have been a flop for a while, and everybody's known it. It's really tough to compete with Raising Cane's, Chick-fil-A, the places that's all they do, and they do it very well. And they're the only ones that have made it through a pretty strict consumer filter. It's pretty tough to compete with them if you're McDonald's and you have burgers and snack wraps and everything else. So I think McDonald's just kind of made a little bit of a strategic error there, trying to focus on chicken strips. And if you're going to do it, you got to do it in the right way. But overall, like you said, McDonald's, bulletproof is the right word. It's exactly what we're seeing when we look at McDonald's app usage, which I think is really critical because it tells us how much their most loyal customer base, how much that very loyal customer base is growing and how engaged they are with the company. That is up 12% year over year, which is an enormous number. 12% is an enormous number when you're talking about a company as big as McDonald's with such a highly engaged digital footprint. So we love to see that from McDonald's. And then when we look at web visits, which that's where people are doing their research on where the McDonald's near them is, if they're on the road, where it's at, the nutrition info, menu items, et cetera. It's a pretty good proxy for overall interest in McDonald's food items, and that's up considerably. Really the largest of all the major players in fast casual and fast food. And so I do have to give a shout out to Steak and Shake at plus 34%. It's good to see them back on the map. But McDonald's beating really the rest of anybody else that matters is a big deal. And I think we can just kind of shrug this downgrade off and move on and say McDonald's is doing very well with the customers that matter and is bringing more of them into the fold and creating a very, very highly engaged, I'm not going to say addicted, but a very loyal fan base that just isn't going to change the way that they're eating or driving through or using the app. It's pretty well ingrained right now, and McDonald's is taking advantage of it.
Andy, that is such a good point about the chicken strips, because that's not McDonald's strength. The other things they put out lately, like the McValue platform and the EDAP, everyday affordable price point, that's where they compete. That's where they're the Michael Jordan of fast food, is price point. They can give you a meal at a lower level than, I don't know, I haven't seen anyone else who's even close to their price point levels, Andy. That's where they're unbeatable. That and the franchise model that they use just makes for a consistent level of income for this company that, like I said, upgrade, downgrade, the stock just powers forward.
Yeah, I think I agree. And I also will say it is very fair to say what was McDonald's thinking in releasing these chicken strips. I mean, anybody that went through with some optimism and got them for the first time, you knew that they are not competitive with Chick-fil-A. They are not competitive with Raising Cane's. They are not at that level. And so it's kind of like, why did that make it through to the final menu board? It just wasn't good enough. And so I think it's fair game to question, management's decision-making and how much they put into that product and the marketing behind it. But overall, it's a blip on the radar. I think that McDonald's has so much else going for it that they can afford to make some mistakes. They can afford to experiment a little bit. I think, they probably understand that the market and Wall Street likes it better when they experiment on the value side of things, on the, the way that they package and market what they already have. But then again, snack wraps are back, and everybody loves those. So they're going to make some mistakes here and there. But if there's any company in the world that can afford to make small missteps, it's McDonald's.
Yeah, exactly right. The scale of this company. And by the way, another small but significant positive, 2024 was full of E. coli expenses that are now pretty much, it was from what I read, behind them. And that should increase the margins, increase the overall profits of the business, because they had a pretty substantial expense from that E. coli scare in 2024 that seems to be behind them now. Part of Loop Capital's downgrade, and by the way, they downgraded from a buy to a hold, price target 346 to 315, growing concerns about domestic comp growth. Now, if I've learned anything about McDonald's over my life of being near one all the time, is they are consistent in terms of their ability to grow and continue to put up numbers. So fears are great. And macro concerns, inflationary concerns, tariff concerns, those are all legitimate concerns. But are they ever going to show up in their numbers? Because McDonald's is one of those companies that just keeps adjusting their sale to whatever economy we find ourselves in, Andy.
Yeah, it's like, you know, when they put this downgrade out, it's like they're essentially saying we don't think McDonald's can keep growing at the level that it has, but McDonald's has a history of keeping growing at the level that it does, and it keeps defying expectations. And at LikeFolio, what we do is we look at the data on the consumer side and we say, well, if that were true, would app usage really be up 12% year over year? Would web visits be up more than any major competitor year over year? And so when we look at that data, it tells us that, you know, quite frankly, Loop Capital is wrong with their concerns. Their concerns are misplaced. Now, concerns about chicken strips, fine, we'll give them that one. But concerns about, growth rate or the consumer when it comes to McDonald's, from our data and our perspective, are just completely wrong. And this is a company that is doing very well, is taking market share. The only suggestion, Kevin, that I have as we go into the weekend is that, you know, everybody do a little competitive due diligence. There's a reason why Steak and Shake's at the top of our chart. It's worth a stop by. If you got one near you, you probably haven't been in one for a year or two, but you know, they've gone to beef tallow fries, they're accepting Bitcoin, they're being very experimental and aggressive, and it seems to be paying off. So, and it is a publicly traded company behind them. So from a due diligence perspective, I think we owe it to ourselves to make a Steak and Shake stop this weekend.
I like the way you think, Andy Swan. And you know, that app usage, that is redefining the drive-through now, because now you order on the app, you pay on the app, and all you do is drive through and pick up now. It's it's added an even easier process to what they're doing. It's pretty incredible. Andy, thanks for coming on, as always, spending your Friday. You're making me hungry, brother. Have a great weekend.
You too. Thanks.
Yeah. So, looking at